All right. Back to work here tonight. Holiday weekend is over. Hope you guys had a restful Monday off for the markets, but it's time to get back to work. Got a short week ahead of us, and I want to make sure we get a good plan to make some money in this short week we have here in front of us. It's Tuesday evening. We're getting ready for Wednesday's trading session. I got a ton of great trades I'm tracking for tomorrow, and as always, I'm going to cover all my favorite setups, all my favorite trade setups in tonight's video. That way, you have a clear, simple game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, hit me up, hit that like button for me, and drop me a comment in the comment section. Say hi in the comment section. Thank you guys for stopping by and tuning in and watching this video here this evening. But enough of the intro, right? What do we have in the charts here in front of us? Lots of ranges, right? Lots of ranges on the S&P and the Nasdaq. Boy, I'll tell you, very bullish right now, but you know there are a lot of great reversals up overhead. Get some beautiful bull traps I'm watching, and I'll tell you, especially on the S&P, some great rotations going lower. You get some breakouts going lower here for the bears. Now again, we're very bullish overall, so I've got some really nice deep pullback for the buyers, and we'll talk about those moves back up. So we have, lots of short side trades, lots of long side trades here in the right spots on the S&P and Nasdaq. I'm going to cover those here in more detail. Oil is trending higher. It's all about China right now. The reopening in China going a little bit smoother than they were expecting here. The big question right now, though, is we're just about to get into some major overhead resistance. Can the buyers break out? Because we've definitely got some space to keep going higher here. But I think tonight, once you see the chart on the oil tonight, you'll see why I love me some bull traps off the high. And again, we're still overall very bullish right now. So we do get those reversals. We got some great spots to pick it back up and let her rip going higher here. So as you can see, there is no shortage of money-making opportunities here on our radar for tomorrow. And before I go over each of those trades, speaking of tomorrow, we do have some news on the schedule for tomorrow. Some pretty big numbers coming out tomorrow. We got retail sales, we got PPI number at 8:30 Eastern time. And then as we go a little bit later on in the session, we hear from James Bullard. We heard from the ECB today. The ECB said they are looking at downshifting their rate hikes later on this year. That's the first kind of, major G7 central bank that's talked about downshifting their rate hikes. People have been speculating the Fed's going to downshift its rate hikes at the end of the month of December, right? We have a Fed announcement coming February 1. So will James Bullard, will he second that notion? I would assume that has potential to move things around here. So on our schedule for tomorrow, again, PPI number, retail sales, definitely going to be big because we got earnings season, right? We're just dipping our toe in the water in the earnings season. Of course, big corporate earnings coming out the next kind of 2.5, 3 weeks. Talking about earnings real quickly, there really isn't a lot on the radar for earnings this week. You'll notice, besides Netflix, a lot of the boring banks, I call them the boring banks. You're not going to see a lot of real crazy volatility off the first few days of earnings. You'll notice there's not really much sexy names on the list here for tomorrow. Trust me though, next week they will make up for the boring banks. I don't think anybody expects the banks to be too big of catalysts. We saw Goldman Sachs and Morgan Stanley dramatically miss their fourth quarter numbers. But again, I wouldn't get too wrapped up in the earnings for this week. Next week though, we definitely have earnings, and that's why retail sales is so important for tomorrow, because retail sales coming out, that'll be a bit of a tip of the hat as far as what we might be seeing for earnings next week. So 8:30 and 9:30 are really the big kind of times you want to be paying attention here for tomorrow. And obviously we'll do this together tomorrow in the trade room. We open up 8 o'clock Eastern time. All right, back to our charts though, because this is where the money's made, right? And of course, I'm going to cover all my favorite trades on each of these markets. So make sure you watch all the way to the end, because every setup that I talk about tonight can be applied to your favorite market. So don't just watch whichever your favorite chart is. If you like making money, you definitely want to watch all the way to the end. Let's grab the S&P, let's grab the Nasdaq, and why don't we grab the oil last here tonight? Got a lot we're going to cover in a very important video here right now. Now, a couple things. First of all, these are all tick charts. Okay, the time frames will all be in the upper left-hand corner. Right, these are all tick charts. This is the 21 EMA. I always use the 21 EMA on all of my charts here tonight. And be aware the S&P and the Nasdaq are very similar, so a lot of the stuff can be very much interchangeable, right? We talk about in the S&P can be applied to the Nasdaq and vice versa. Now you'll notice there's a lot going on this chart right now. We do still have an overall bull bias, and the way that I find my directional bias is I use a 60-minute chart. So use an hour chart, 60-minute chart, and you'll see, right? It's pretty easy to call a 60-minute chart a bull bias. I'm a short-term trader, so for me, that is a long-term time frame. You're more than welcome to use a longer-term time frame than that, but I think that fits pretty well. So right now, we're pretty bullish overall, and that, of course, will be the lens in which I look at this chart here for tonight. Knowing that much, the most important factor that you need to be aware of on this chart is we have a bull market into a trading range, right? Price went below the range, it popped up, and now we have what I call rotation off the high. Ranges love to rotate. They love to rotate back and forth. So we had that strong pop up, and now we're kind of back inside that trading range. What we're thinking now is the market's got potential to now roll over, take out what we call the pendulum swing, which is basically the amount above projected down below. And really, for the most part, if the bears get what they really want here for tomorrow, they'll end up down around this reversal target zone, around that 39.70 area, 39.68 half there, to be more precise, right? That's what the bears would love to get to right now. Now, the buyers, they may not, again, we're overall, pretty bullish right now. This could easily be a larger bull channel, and again, we get a lot of support down below. So, buyers, they love to get a failed, kind of a failed rolling over there. We'll definitely talk about that as well. And buyers would love to get some breakouts going higher. Got plenty of space up overhead right now. So basically, as we go lower, right, bears are trading breakouts. As we go lower, sellers will look for bear traps, right? Bear traps off the low. So many ways to make money there. As we go higher, right? As we go higher, bull traps, right? Bull traps off the high are where the bears are looking for, because ranges act like magnets. And if they can hold the breakout, they couldn't do it earlier. If they can hold the breakout there, we got potential for a breakout and another leg higher, that 40.71 level. So I'm going to cover both directions on this right now. What is most likely right now is to get that rotation off the high. Later on in this video, we'll talk about those bull traps, right, and those breakouts going higher here. Here are a couple things that you want to think about if we can get this thing to roll lower. Usually when you get these rotations like this, you'll get something along the lines of this, a pop and grind. So watch out as the market rolls lower. Watch out for it beginning to grind down. And once it grinds down, that's usually a pretty good sign. I can draw a trend line off that low, draw a trend line for a channel right up off that high, and then start looking for entries up around the high of that channel. Now, my favorite entries on these are traps like this one above a prior swing, or like a buyer failure, right? Buyers will oftentimes come in, try to buy the pullback off the 21. We can use their stops as fuel. I can use a pullback combination, right? So really all of the entry patterns that I talk about in my free trading course will apply right there. Now remember, it's very important that we pop down and begin to grind down. That grind is the giveaway. Once we see that pop down and grind, we now know the odds are good for a retest of that level, and that's where I can start looking for bull trap, right? A trap entry, a buyer failure entry, a pullback combination entry, and again, right? And again, these are all the same patterns you guys are learning in the free trading course, and we know where they want to go, right? That 39.70. Now, let's say, for example, we take out that pendulum swing. We may not get the pop and grind going down. They may take out the pendulum swing. They may pull back into something like, like that, and we may see it just simply jump off of that moving average. Okay, remember, ranges are magnets. And so we have a hard time selling that first pullback, right? Because oftentimes it'll fail and go back up into that range. I'm going to talk about that in 2 seconds here. But the most important thing now is if they jump off that moving average, right? We now know we get a lot of momentum now. We've broken free of that range. And now I'm going to go out. I'm going to draw my channel backwards, draw it off the low, pin it right up around those highs. And again, right, look left. We talk about this a lot in the free trading course. Find those prior swings, right? And don't miss that entry off the high. Now I'm going to keep things pretty simple here tonight just to keep the video short. It could be a bull trap, like in this example I'm showing. It could pop up, buyers try, in a failure, back down. So again, all the stuff you guys are learning in the free trading course, which reminds me, I've talked a lot about the free trading course, the traps, the failures, the pullback combinations. I know most of you guys and gals have taken the free class. You know these setups. You're making money on them on your own account. But listen, if you're here for the first time right now, if you haven't taken that free trading class, one of the few folks watching right now, what I'll do is I'll put a little link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy that I teach in that video will show you a stupidly simple trick so you know where the best winning trades will be each day. That'll make it easy to stay patient, and I'll give you 4 different entry patterns to help you kickstart you making money on your own account. If you're missing the best trades right now, if you're not getting the results you want right now, hit that link, right? Take that free course. It's perfect for someone trying to make the jump into full-time trading. And again, next time we see a pop and a grind down, there's a lot of examples, right, of that bull trap, failure, a lot of examples, right, of those types of entry patterns. One more move going lower, right? One more move going lower here. Now, I put a little note on this so I didn't forget about it. Oftentimes, anytime we have a range, if let's say, for example, the market completely falls apart, right? Completely falls apart overnight. When that happens, you want to start thinking, you don't want to chase the move lower, right? We don't want to sell low. We want to sell high. Where's a good place to want to short a bounce? The underbelly of the range, right? We oftentimes see the market now, because again, if it rolls over overnight, what will happen is, again, people will not want to short very low. We also expect buyers down here because we have an overall bullish market, right? Look at this in a bigger picture chart. A lot of support down there. So the bottom line is, if we get this thing to really just crush it and run lower overnight, I'm not trying to chase this thing. What I'll do is I'll start thinking, okay, I see that area. I see that area. More importantly, I want to go out, find a new larger channel, right? And you can see what I'm doing here. Get that pop up. And if I can get these buyers, right? If I can get these buyers now coming in and trying to take the bait and going higher, remember at this point, it's a very strong move down. And so the odds are very good we retest that low. Now, once we retest the low, then we may see that bounce way back up into that trading range. Because again, that's that bullish overall bias. But if I can get these buyers to come in and take the bait on this, I can use their stops, right, as fuel and just simply sell right into those stops. Remember, again, we're looking to combine, right, some of the kind of the underbelly of that trading range, almost like a breakout pullback, right? And then use those stops as fuel for that run going back down to retest the low. So again, looking at that rotation off the high. Now, obviously, let's talk about the long side. Let's talk about the long side here. Now, it's a bit tough right now because we've got, support levels. There's a lot of different areas where buyers may come in. What you have to be careful with, though, is whenever we have that rotation off the high, and again, I'm going to cover the short off the high here, right? I have not forgotten that one because that is a great short as well. So I'm not going to leave you hanging on that, but give me a couple seconds here and let's talk about this. As we rotate off the high, what is my big problem? Momentum. Now, again, I'm a short-term trader, right? I'm not a long-term trader. So if you're a long-term trader, sure, buying down here is not again, it's not my cup of tea because of all that momentum, right? But I could see where longer-term traders might say, what are you doing shorting down here, right? So I get that. On a short-term basis, though, if I get this strong move going lower, what do the bears want? They want to what? They want to retest that low. Okay, so keep that in mind here and think about first a bear trap. So as we go lower, let's imagine now the bears don't come back and jump off the moving average, right? For that 1, 2, 3. No. Now we're at support, and now the bears start showing signs of exhaustion. They try once, we go higher. They try twice. Remember, they want to retest that low. Okay, we call this the 2-try rule in our trade room. You will learn a lot about how the 2-try rule. The 2-try rule is, I don't want to say it's the biggest key to making money, but it's a very big part of it. It's a very big part of it. If you're taking too many losses, learn the 2-try rule. You'll learn a lot about that in that free trading course. Bears try twice, right? Now, once they do, you got to remember, right? The bears going to run this thing lower. I want that nice, strong signal. And again, this would be a trap setup. In context, it's a 2-try failure. The bears try once, the bears try twice. Okay, that's one variation. Now again, this could be here, it could be here, it could also be all the way down here, right? So again, that bear trap as we go lower. The next scenario would be this. We go lower, the bears come in, they actually take out that low. Right? They actually do retest the low. Good for you. Mission accomplished. Once those bears take out that low, they have to show us they want more. At this point now, look for rookies coming in. Right? Look for rookies now. Let them try once. Let them try twice. And then hit them right into those stops. Right? Think about where those stops are. Now, I want you to really see the difference between those last two examples. Okay, one is a strong move down and then a trap low, right? We have to use a trap on this because they're trying to retest that low, right? I don't want to buy it if it keeps going higher because what's going to happen? More bears will come in and try to run lower, and what will happen is you'll get bounced out of that position, right? Trying to buy it as it goes higher. You'll get stopped out on your tight stop, and you'll be wishing you had that trap. Okay, I want to make sure you see the difference in these two scenarios because if you understand the difference, you're really way ahead of the game here. All right. So one is we don't retest the low, look for a trap. The other one is we do retest the low, and therefore we can be a lot more aggressive and we can use those rookie stops and hit them right back up into that high here. All right. Let me know what you think, by the way, in the comments section here below. And also, too, I should also mention, too, down in the description of the video, I have some longer term time frames on this for the S&P, the Nasdaq, and the oil. I forgot to mention it earlier. But if you want to see some bigger picture levels, some hourly charts, some 4-hour charts, I tossed a bunch of my favorite longer term time frames down the description of the YouTube video. So grab those, and you'll see what I mean, right? You'll see what I mean why this area is a reversal target. All right, I think we're looking pretty good there on that. There's quite a bit more on this that I could definitely go over, but we're running late on time here already. We'll cover some more tomorrow in the trade room. Now the next thing is as we go higher, how do I sell it? Oh yes. How do I buy it? Ooh, I like that idea. What else we got going on? How about some Nasdaq? Let's grab some NASDAQ here. NASDAQ is very similar, but one thing you'll notice here is the NASDAQ's, well, let's take a look, right? What's going on right now? So again, the NASDAQ, again, has an overall bull bias, right? Look at a 60-minute chart, and you can't really call that a bear market right now, right? It's an overall bull bias. That's the lens, okay? We have a trading range. And again, the kind of the most important thing right now in a nutshell is we go up, we're bullish into a trading range. We pop up, the buyers are not holding a put, right? They're not holding that breakout, and we go collapsing back into that trading range. Now remember, on the S&P is back into that range looking for what? Looking for that rotation back in the opposite direction. And again, we've got some ways to sort that thing on the way down. Look at the NASDAQ though. Right? The NASDAQ it's there, right? It's there for the drop, right? It's there for the drop, but you can certainly see here right now, the NASDAQ looks like it might have a range up here. The NASDAQ looks a whole lot more bullish than the S&P does, doesn't it? It really does. You know, the S&P and NASDAQ are very similar. You know, they're not identical twins. They're more like, you know, close cousins, right? They're not exactly the same, but they do rhythm, right? They have kind of the rhyme together. Anyways, so we know, right? We know how to trade that rotation, right? We know as it goes lower to be looking for that move back to take out some of these lows, be looking for those channels, be looking for those bull trap entries above the highs, right? We covered that on the S&P. What I really think is interesting about the NASDAQ right now is that this certainly smells like a new range. Right? So as we go higher here, ranges act like magnets, right? So if we can go up, bunch of resistance overhead with a range and a range down below. Sellers, right? Sellers, as we go higher, sellers want to sell the bull trap, right? They want to trap in these buyers and short this thing back down into that trading range. The buyers, of course, they want to buy a breakout, right? They need to hold this pullback and rip, right? The buyers have to show us they can hold this, because if they don't, we're going to get a la that, right? We're going to get that again, right? There'll be deja vu for those buyers who bought the breakout going higher. So how do we short it? How do we get long on this as we're going higher? The short is the easier one, right? It's kind of the more desirable one right now because of the ranges that we're seeing, and get a bunch of resistance kind of up overhead. Again, like I said earlier, grab that 60-minute chart I have in the description of the YouTube video, and you'll kind of see where all these levels, right, are coming from in that wide open space up above us. Anyways, so check that out in the description there below. As we go higher, great place to sell short, right, at resistance, range, channel, right? Just fantastic place to sell short. What's my problem though? Momentum, right? We are short-term bullish. We are long-term bullish, right? Or medium-term bullish. Again, you know, don't get too wrapped up in the semantics on that, right? But we're bullish, right? So if I want to be a seller, do I have any edge besides resistance? No, right? I need some sort of catalyst to take this thing going lower. And remember, right, if I can quote the late Mark Douglas, right? Every trade is unique, right? Every trade is unique. I can't look at this and go, oh, I'm going to sell right there. What happened? No, every trade is unique. So as we go higher, we have to start thinking, okay, if I want to be a seller, I need to offset that momentum. I need some sort of catalyst, right, on this trade, and that's where a bull trap comes in handy, right? That's where bull traps come in handy. And again, when I think bull trap, I think the 2-try rule, right? In order for me to call a top in any market, I need a level of resistance, right? I need signs of exhaustion. 2-try rule. I need a catalyst, and that is running stops, right? In my eyes, it's not enough to be at resistance above a range, right? It's not enough. Not when I'm trying to go against the 60-minute trend and this faster time frame trend, right? The entry time frame trend. So I love the area, right? That's one part of calling a top, but I got to see signs of exhaustion, because there's just as much potential or rips and goes higher here, right? Especially with earnings coming next week, this market, it could easily rip. We don't know, right? Anybody who says they do know is either ignorant, naive, right? Or simply lying to you for clicks on YouTube. Long story short, we want to see a catalyst, right? The catalyst is once those buyers get long, where's their pain, right? What I always teach is think about, put yourself in the shoes of the buyers, right? Where would your stop be? Where would your pain be, and sell right into that pain, right? Because that's where rookie traders, inexperienced traders who are the ones undoubtedly buying that high, right? That's where they get, well, in this case, the buyers become sellers and they get that rip going back down into that trading range. One of my favorite trades on this is to go up, trapping those buyers, right? Or up, double top, right? Remember we talked about this down here. It's the same exact scenario except flipped to the side, right? I love to get that pop up. If they do retest the high there, good for them. That makes our job even easier. Once they retest the high, then we grab those, right? We grab the rookies, right? Now we rope in the rookies here. They're trying to buy right into that high. Now, where stops? Right? Short that sucker right into those stops. And then as we start to turn and roll lower, where does the market want to go now? Where does it want to go? It wants to go right back into that trading range. Specifically, it wants to take out the low of that range, the opposite side of that trading range. Now, we talked about this pattern a little bit before. We go off the lows, right? Up around the high. We drill down, right? We find those what? We find swings, right? And we don't miss that first test. As we always say, first test is the best test, right? So again, bull trap above that high. And then as we begin to roll over, I'm finding that new channel, right? You smell what I'm stepping in right there? And then hit that bull trap, buyer failure, right? Pullback combo, all the same entry patterns you guys are learning in the free trading course, all right? So that's the way you sell it, right? Off the high. Now, how do we buy it, right? How do we buy the breakout? They have to pop it up, right? But unlike over here, they got to hold the pullback, right? They got to hold it, and they have to really jump. And that jump, right? That jump needs to be like, whoa, right? It needs to be a very strong jump off that high, right? I'm not talking about like retest like that. That's not enough. It needs to really stretch its legs and really pop. Okay, because again, anytime we see a range like this, if they can't hold that pullback, it's going to go back into that trading range, right? I would love to say there's some magic indicator or something like that that could predict when these are going to hold, right? Don't bother with divergence or volume, volume spread. Don't bother that stuff. I've tried I can't say every single. I've been doing this for quite a long time. I still haven't found a way to tell which one of those will hold and which one doesn't. That's why I let the buyers show me. Let them try a couple times, and then I know I can short, right? Let the buyers turn their cards up. Once I see their cards, then I know how to play my hand. Makes sense? Then mark off that high, right? Mark off that low. Sometimes what I'll do is I'll bring it down to that big low like this, right? And I want to get that first test, right? Get that first test. It could be a bear trap, like in this example, right? It could be above that 21 moving average. Bears coming in, looking for that short, right? And that retest or that failure. Remember, anytime we see a strong move like this, they want to retest that high. My job is to find a way in off the low of that channel before they retest the high. Once they retest the high, then what can we do? Then we can go 1-2 back down again, right? There's that double top we talked before, right? There's nothing wrong with this at all, right? You've got the bear trap, the seller failure, buy that pullback, and then once you see them start to struggle on that retest, boom, right? Hit their stops and take it back lower, right? So that's a very easy sequence, I think, to understand as we're going higher. Another possibility would be basically a pop and grind breakout, right? So in this example, we can pop up and we begin to grind and grind and grind. The grinder is a really big giveaway. I mentioned it earlier, right? Then we can mark off that high. We can mark off that low. And again, we can go out, start drilling down, right? Finding those swings and grabbing that first test. Now, something to consider about these breakouts, right? Something to be aware of the breakouts. The first leg is the measuring leg. So if you're wondering, okay, where does the target go if I can get off that long? first leg, third leg. Okay, you always want to remember, if we do see a breakout, right? If the breakout pops and holds, that first leg is your best friend. Because once you know how deep that pullback is, you can take the size of that leg, copy and paste it, and that becomes kind of your objective, right? That becomes your target. That will help you squeeze out a little more profit, right, on that runner. What I like to do is take a profit off of the high, right, and then use that one leg, third leg, first leg, third leg, and use that as your runner. Okay, that way you protect yourself. If we do end up holding that high, right, and rolling back over, at least you've got what is the most, not guaranteed, but most likely objective is a retest of that high. All right, guys, what do you think, by the way? What do you think, right? Am I crazy for trying to buy that breakout? Do you like that failure, that reversal? What do you think? I'd love to know, especially since we're 30 minutes into the video right now. If you're still watching this video right now, you are the person I do these lessons for. If you're still watching this right now, I'd love to hear your feedback. I'd also love to know what you think the most important part of these videos for you is. I'm always trying to make these things better for you. All right, so I think we got this covered. And again, remember, the same thing goes on the S&P, right? Same thing on the S&P. In fact, the S&P, I would say, is even more potential for that crown reversal, that double, even more potential, because again, the Nasdaq looks a little bit more bullish than the S&P does. All right, let's wrap things up on oil. Oil is a little bit tricky for tomorrow. We got rollover happening here right now. Right now here on oil, this is the 323 contract. If you're an oil trader like I am, you want to think about the 18th of the month, right? The 18th of the month is usually about when you get the rollover. It could be the 17th. It's rarely the 19th, but usually sometime between 16th, 17th, 18th of the month. Tomorrow, of course, is the 18th of January. We do usually see some rollover. So be aware of that. The reason why I say my job's a bit difficult in this one is the oil, just the way the oil rollover works, as you can see here, there's a lot of big move up, big move down, big move back up. It can get a bit squirrely during that rollover. So we'll do our best. Keep in mind, too, oil is very, very news-driven right now, and its current obsession is the reopening in China. We heard from China this morning talking about how they were optimistic with how well they had gone through their kind of reopening. Now, China isn't exactly known for being truthful with their numbers. We found out over the weekend that China had inflated its population growth by 100 million people. And so take that for what it's worth. They also told us it didn't come from a lab either, but I'll leave I better be careful here before I get shadow banned here on YouTube. Anyways, you get the point, right? So China is very much kind of, I would say, in the driver's seat here on oil. We do have an overall bull bias, right? So we are still, again, looking at a 60-minute chart. And really the most important thing right now is it's a very strong move up. Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. Now, once we get back to retest the high, do these buyers struggle and give us a short off the high? Right? Or do they hold and blast and keep going? We're at 81.5 here right now. I'm looking at, what do we got up here? Big breakout targets, basically 84, right? 84 is kind of the where the buyers, I think, would love to get here for tomorrow. But, I think this whole area right there, 83.62, 83.95, those would be where, if we can start to rip, those would be where I would imagine buyers are going to be hunting for right now. If we do go lower, right? If we go lower, again, we've got the potential for that reversal off the high, but then this may go into a range here. And so this is where we can look for bear traps down here, and this may become one big trading range, right? So, for example, as we go higher here, right, I can sell, right, the bull trap, right? I can buy the breakout going higher. As we go lower, I can sell the reversal, right, going lower. Right? And I can sell or I can buy the bear traps, right? Buy the bear traps down below. All right. And we've covered a lot of this stuff already, right? So as we go higher here, we're quite bullish, right? We're quite bullish, but again, we're retesting these highs, right? So buyers come in. Now, the big variable here in my eyes is this trend line. you'll notice this trend line coming up. So in this case, I'd like to get the buyers trying once, trying twice. Because of that trend line, you want to try to sell as high as you can. And the best way to do that is with a bull trap, right? A trap above that high. And again, we're talking a lot about trap patterns here. I'll put the link for the free trading course to learn these setups inside the description here. I've also got some larger time frames here on the oil down there for you. I'd be thinking about this though. Think about that bull trap and then below that trend line and then back for that breakout pullback. This is kind of the general idea. We'll obviously drill down and we'll get more serious about this tomorrow, but this would be how you'd want to short this thing off the high, right? Trap those buyers in because again, we're not a bear market right now. We are overall bullish. And, China, of course, kind of leading the way here right now. So a bull trap, right? So sell the bull trap. And then because of that trend line, think about now this breaking down and then getting that moving average down below, right? And grabbing it. I mean, think about how nice that short would be right there, right? Find that new channel. And then, of course, remember, it's the underbelly of that trend line. And we know where the bears want to get at that point. They'll want to go back into that range from last week at about 79. Okay, that's how we want to short this thing as it goes higher. As it goes higher, remember, if they can hold this pullback, right, and go, this is where we start thinking about the breakout, right? So they hold the pullback, they blast up, and they jam running higher. Forget about that channel in that example, right? They hold the pullback off the 21. They blast up and rip higher here now. Strong move, wants to get another leg going higher. We mark off that high. We mark off that low. And start thinking about, right? Like that is support, right? So all of those areas now for that breakout pullback. Again, I'm keeping things really simple right now. I'm keeping it pretty simple to keep the video kind of brief for us here. We'll go into more details. You'll learn about the bear trap, the seller failure patterns off of that. And again, pretty good idea of where the bears, right, want to get to if they can. We pop up, we keep grinding. Again, same basic idea, right? Find that new channel, find those prior swings, get that deep pullback underneath prior swings, underneath the moving average, right? We've talked about this pattern setup, right, over and over again, right? Bear trap, seller failure, right? And then pullback combo, strength trade, right, as we go, right? As we go. All right, I like that sequence here. Again, got to wait for proof, though, they can get above this high here. If we end up all the way back down, what's the problem? Momentum. Great place to be a buyer, but I have to think bears once, bears twice, trap low for the entry, or they retest that low, rope in those bears, right? 1, 2, pop it back up, right? We talked about that a moment ago on the S&P, or right, they roll lower, they hold the pullback, and they don't try and fail. No, they hold that pullback, and what do? They blast, right? They jump off that moving average. I'm not going to sell that first one. I like to short off the trend line, right? But if they can get this thing to 1, 2, and then really jump off that 21 EMA, it really confirms for us now, looking for one more leg going lower. We can then go out, mark off this high, and go again. This is the same exact reversal setup we talked about on the S&P earlier, right? As the S&P rotates off the high, it's the same basic idea, right? And so that'll give you an idea of kind of how to short this thing, right, going lower. And then, boy, I'll tell you, there's a lot of levels down below. You will see on that 60-minute chart, I posted the description. You'll see a lot of bigger levels down there we'll be using tomorrow morning in our trade room. All right, guys, that's the game plan for oil. Be aware if oil is a bit squirrely overnight, it's because of rollover. I kind of rolled a bit early because tomorrow we will be on that 323 contract in the trade room. All right, I like where this is looking for tomorrow. Will the bears get that rolling over? Will the bulls get that pop and fail? Time will tell. In the meantime here, guys, we'll see you tomorrow morning, right? 8 o'clock Eastern time in our trade room. Again, I'll put all the important links you need, the description of the YouTube video. So grab that free trading course link, learn how to find the best winning trades each day. And again, they'll give you a kickstart, start making money on your own account, and then you'll be ready and primed for trading with us here in the trade room. The easiest way to get help, about anything we talked about tonight is to call the office, use live chat. We're always here, right? We're always here. Even when I leave, it'll forward to my cell phone. So don't be afraid to call the office if you got any questions. And as always, I'd love to hear from you in the comment section below. Give me a hell yeah in the comment section below. Love to hear you guys and your opinions and your feedback on the video. All right, guys. So look forward to seeing you in the comment section as well. That's it for me, though. That's it for me. Get a great video tonight. Good plan for tomorrow. Now we go out and trade our plan tomorrow morning. Hope you learned a bunch here tonight. Hopefully I'll see you tomorrow. We can trade this stuff together in the trade room. In the meantime, get some sleep, get some rest. We'll see you tomorrow morning, 8 o'clock Eastern time. Be there or be square. If not, same time, same place tomorrow night. My name is Joseph. Be well, be nice to each other, and you better be here tomorrow, right? All right. Adios, amigos. Bye-bye for now.